Hey, welcome to the fundamentals of real estate. I'm your host here today, Angela Dillmon at Keller Williams Realty Chesterfield. This is my wealth building partner.
It's Glen Calvin at Gil Mortgage, Chesterfield, Missouri. Yeah.
We have a question of the day for you.
What is my question?
Is your lender worth it?
Oh, that's a great question. Yeah.
I'm just asking you, is your lender worth it?
Yeah.
All right, so do you think all lenders are the same? Do you think price is the only thing that sets them apart? What are you, when you think about contacting a lender, how do you pick one? Right? That's really want you to think about it. Whether you're refinancing, purchasing, setting up a home equity, how are you picking or choosing this lender?
Yeah, and it's so different that, with the internet and people online searching, you're seeing a lot of our business start to kind of morph to that. I go online, I click a button.
Yes. Are you picking someone just because it's easy?
Yeah. That's
right.
A great point.
All right. Because there's a lot of differences in lenders, right?
Yeah, and we spent a lot of time in the last podcast talking about the differences in realtors. It's very similar.
Yeah, very similar. So I know you have a great story about John Glen.
It's actually Alan Shepard, and the story
Alan
is
Shepard.
He was on the rocket, getting ready to take off, and they were going to interview him, and they said, what's going through your mind as you get ready to go off on this historic mission? And he says, what's going through my mind is every piece of this rocket was built by the lowest bidder. And I don't know, it might be urban legend, but when you're sitting at that closing table and there's a problem, the fact that you got a lower interest rate of an eighth or the closing costs were a couple $100, that doesn't make that big a difference.
Yeah, right. It's got to be there. All right. So let me ask you a question, Glenn.
All right.
When it comes to lenders, are they all equal in their costs? Cost is a thing, but it's not the only thing. So when someone first calls you, what's the first thing you ask them? What's the first thing you do?
That's a great question. So what I want to find out for them is what are their goals? What are they looking to achieve? We talked a lot about that first-time home buyer. We want to screen for those programs. Are they buying a new house? They're selling their existing one? Can they sell? Do they want to buy this new house before selling? Right. It's just an interview process. It's really just getting to know them and finding out what their goals are. Yeah,
so here's the thing. People tend to avoid areas that they're not very knowledgeable in or they think are a lot of work. So lenders sometimes tend to not only go to certain programs, and they don't have a good menu of programs for you, and they don't explore all the possibilities. So that's one big one right there. There are a lot of lenders that don't do first-time homebuyers.
Interesting. Yeah.
There's a lot of lenders who don't have specific first-time homebuyer programs. Like Guild has an exclusive one, right? In addition to all the other ones.
There are lenders that won't underwrite a pre-approved loan, which is really shocking.
Okay, so one of the strategies in a multiple offer situation right now is to be completely underwritten, which is different from a pre-approval, right?
It really is, and we talked about this last week. I can't stress how important that is. That really takes a lot of the drama out of it. The loan officer, we're a little bit overlap what we did last week. The loan officer doesn't make the decision.
Right.
His job is to bring the business in. Now, hopefully, he's a loan officer that has experience, that can look at those numbers and guide you in the right way, but it goes to the processor. Then the underwriter is the one that approves that loan.
That's right. Yeah. So some lenders won't underwrite. They won't spend the money or the time because this costs. Right. This costs the lender money, and you don't pay for it. Right. It is a free service. So if your lender's not doing that, then that's definitely a problem.
And on that subject, I would want to know whether your lender is underwriting the stuff. We call it in-house, that they're doing it on their own. Are they farming it off? I'll say that the pandemic changed a lot about working remotely. Mm-hmm. But one thing I love about Guild is we do everything here. It's our underwriters. And if I need to get on the phone with the head of our underwriting, I can
just
get
like
in touch
that.
with her. Yes.
When I have a question, sometimes let me call boom, pop, and we're on a conversation just like that. So are the underwriters local? Mm-hmm. Are they out of state someplace? Right. Or are they some mortgage companies? Now, there's a difference between mortgage companies and banks too, but some mortgage companies don't have their own underwriters. Right. And when they do a loan, they pick an investor who's going to buy it in the secondary market, and they send it off to their underwriting. And that underwriting process can take days. And it's another reason why they can't underwrite you ahead of time, because they don't know who they're going to sell it to in the end. So in-house underwriting and very, very good processing staff, which they have here at Guild. So one of the reasons we are partners, they are so good at it, and it's fast. And right now in this market, speed wins the day. You know what we're seeing this year is 2.5 and 3 week closings. It was 4 weeks and more. Now it is 2.5 to 3 weeks on a regular basis. And you have to have a lender who can pull that off.
Right.
And if you're not completely underwritten, well, and it's probably not happening. That's all I'm saying.
And I think you want to be careful with that lender that tells you what you want to hear. You know, we talked earlier about the bad stereotype in lending is the one who says, no problem, no problem, no problem. Then we're 5 days for closing and then calling up Angie, we've got a problem.
We got a problem, and that is a nightmare. That's a nightmare.
It is, and I'm not to say that things don't come up that are beyond our control.
Right.
But, you know, having a way to do that, and I like it here because we can turn around fast when that thing.
Right. But
to me, you want somebody that's full disclosure, that's going to lay out the fees, and then somebody that's going to take the time to go over the fees and explain what they are, rather than just saying our closing costs are this. Well, this is our processing fee, and this is what helps keep our rates down. This is the appraisal. This is what goes for your title insurance, and you do a great job with a consultation with your people at the beginning. I do the same thing.
Right.
So when I talk to somebody, I'm going to spend that time and go over the fees, the process, and set their expectations.
So there is a thing called a good faith estimate, but you have to realize what's on the good faith estimate.
It's not a good faith anymore. It's a loan estimate.
That's a loan estimate.
Right, and then we have our scenario. But yeah.
Okay, all right. So loan estimate. But only a small portion of that is under the lender's control.
Right.
Right. And that is the fees for origination and processing and credit and appraisal and all those things. The rest of the stuff, your title insurance, your homeowner's insurance, your inspections, all that stuff out of their control, and it's done by other parties that you get to choose. So this one little portion of the loan estimate is under the lender's control. If you are using someone that's easy and you're just clicking online because you found them or you saw them on TV, I can guarantee that their overhead is very, very large.
Somebody has to pay for that advertising.
That's right. And so one of the big things that does set them apart are these origination and processing fees. Right? And so at Guild, they keep those very, very low, the lowest I have seen. But it is not uncommon for someone to charge, a lending institution to charge $5,000 to $10,000 to do a loan, to process, originate, underwrite a loan. And that's just not true here at Guild. They don't do that. And so you need to compare. If you're not shopping, you know, if you're clicking somebody online, please go get another
somebody that'll take the time and explain it to you and what it is, because sometimes I'm not paying any points, and then you look at the way the rates are, and it could be that I can pay a half a point, I can lower my interest rate 3/8. So I like to give people options and show what they can do, what's achievable, and and
then there's the strategies for buying before you sell.
Right, that's a big
one. And
you
have to really have a lender who can explain those and has ideas and programs for them. Right now, one thing I do like about Glen, sometimes I tell people this too, is like, hey, let's start with Glen. If Glen has a variety of programs and very low lending fees, let's start there. And sometimes Glen will tell me, you know what, my programs, I have one, but it's not as affordable as this guy over here at this credit union. Yeah. So you do want a lender who has good connections, just like you want a realtor who has good connections.
And I learned long ago, I can't be all things to all people.
Right.
And just like you, I have a very good network of people and peers in the industry where I can recommend and I can put them in touch with somebody, especially when a construction to perm or maybe some bridge financing that's a little quirky, just to have those resources. And you know, it comes back to you. Because those people are coming to me, referring me the deals that don't fit right for them either.
Right. So you want somebody with a lot of strategies, right? Yeah. So even on the realtor side, when we're selling someone's home, we have lots of different strategies. When we're helping someone buy a home, there's lots of different strategies. When you have a lender, there's lots of different strategies. You're not just one way to do something all the time, right? They are constrained by the secondary market and the people buying the loans, right? The companies buying the loans set the rules, right? Yep. But they have a lot of different options of how you can do things, and you want someone who's going to explain and go through all those.
The other thing I like is at Guild, we keep a lot of our loans. I'd say 85-90% of them.
Oh, this is so huge. Who services the loan? Yeah. So most of them get sold off. Someone else services them. Some company you don't know. You didn't sign up for. You hate. They don't, They don't communicate.
Kind of a funny game they play because the more money they make, the more money by hiring the people at the lowest wage to service the greatest amount of loans.
Oh my gosh.
One thing I love about Guild, they're great with their customer service. I can get on the phone and talk to them anyway. And, you can't change the taxes and insurance. You can't change the payment. But there can be issues that come up with escrow.
Sure.
You could have trouble maybe making you to buy and lose your job or get injured. Maybe you need a strategy to work through that.
Right. Or sometimes when you're buying a home, you want to... You buy the home first, you sell yours, and we're doing a lot of these right now where you're like, we'll take that equity then that is closed 2 months after I bought and plunk it down on my existing home and home loan and recalibrate it.
And my corny joke is, I don't ever call them closings. I call them celebrations or beginnings because I'm not closing that relationship. And that's another thing that I would say I pride myself in, that I'm going to stay in touch with the people. I'm going to see if the rates improve. Can we better? If there's an issue with the insurance claim, if they have any questions, to keep that relationship going.
Yeah, absolutely. So there's lots of things to do even post-closing, and you want a lender who's going to look out for you. And right now, you want one who's going to look out for you, who's going to help you refinance as soon as those rate drops. We have a great tool for that we share. It's called HomeBot. If you can sign up for it. It's a free tool. If you don't have it, just click on the link below, and this will help you see when rates are dropping. You can just shoot us a message, but Glen watches them, and he's like, okay, hey, it's time to refinance and lower the cost of your home ownership. So you want someone who's going to be here for you afterwards. So underwriting, in-house processing, and servicing the loan, all big ones. And
somebody you want to be comfortable with. Do you communicate well with this person? Do you feel comfortable? Because we're going to dig deep into your finances, and we're going to look at a lot of issues. Your credit score, your income, savings, all that. So make sure it's somebody that you feel comfortable with.
Well, thanks for joining us today here on the Fundamentals. I hope you had some fun today. So I know it's always not fun to pick an agent or pick a lender. It's
not always fun to go in debt.
But it's fun when you pick the right one, right? When you pick the right one who's going to help you build wealth, live your dream lifestyle, and leave legacies that matter. Join us next week. Would you like to know how much cash is in your home? Would you like to know what that cash could do for you? Would you like to figure out how to pay off your home faster? Would you like to set up a private search where no one will try to bug you or sell you anything when you're searching for another home? I got an app for that. The wealth building app for your home. HomeBot. It's free. Click here.